that we've got to start with the Australian dollar, haven't we? Finally, it's broken out of that range, sitting around the 73.50 mark in today's trade, but it looks pretty weak, I think.
It sure does. And, you know, it's been trending lower for a while now. I think part of the reason was because, you know, we've been in lockdown. The RBA has been a little bit more dovish than some of the other central banks. But today we, as you say, overnight especially, we cracked lower. So this is a daily Aussie-US chart. And as you can see, it's a short-term trend lower is well in place. The 5-day moving average is below the 10-day moving average, and the 10-day moving average is below the 20-day moving average. All three are pointing lower. And while this formation remains, the Aussie is a sell the rally. In fact, I think it's a short already. If you're not short, you probably want to sell some pretty soon, and we might not see that much in the way of rallies. So while this formation holds, it remains bearish. A move above the 20-day moving average, which is pretty far away now on the top side, that comes in at 74.83. That would also negate the bearish setup that we're seeing now. So perhaps we should move to the next chart, which is this is a weekly. So this was the big break last night. So if you take the move from 69.90 all the way to the top that we had at 80.07, the 61.8 Fibonacci retracement of that came in at 73.78, and we broke and closed below that level last night. Now that was really the last of the technical levels that was holding, and with that one gone, there really isn't any technical support of note until 72.30.35, and that's where the 76.4 Fibonacci retracement of that move comes in, and that also coincides where the 200-day moving average comes in as well. And I did hear a couple of banks today actually talking about that level as their objective for this move lower. And I think that's kind of a minimum move. It really depends on what happens in other assets, because the Aussie is very much tied to the global growth story and also risk assets. If we get if this is time for a 10% correction in, say, some of the major stock markets, the Aussie could easily go down towards the 70-cent level. But 72.30 is 30.35. That's the level that we're looking for at the time being.